Hey everyone, it's Nick with Us versus Herd. Today I want to actually first thank you guys for all the people that are subscribing. Is this your first time coming across this channel or your first time here? Definitely hit subscribe so you get those alerts. We go live a couple times a week here, and we actually post a video or 2 videos a day even. So I just want to go over that real quick. But what I want to talk about today is gambling in the market, or people that think they're going to win big, even with trading options. I mean, yes, you can win or you can make a lot of money trading options, but it's better to have more consistent wins than it is to, bet the farm or bet the house or whatever you want to say, on anything. There's a lot of opportunity in the market. There's a lot of things, but when it comes to trading options, there's a couple of things you have to get right. The timing and your position needs to be correct. Yes, people say, hey, you can make money on neutral positions and, you do all this thing, but a lot of times, what happens, let's say you have an iron condor on, or you have a, excuse me, a straddle or a strangle or whatever the case is, whether you're selling or buying. I mean, there's a lot of different positions that you need to have, and depending on the setup, there's a different position you are. There's a time to put on an iron condor in a neutral position. There's a time to buy a call. There's a time to buy a put. There's a time to sell a put or sell a call. There's a time to sell a vertical put. Time to sell a vertical call, depending on the setup. And you really need to concentrate on what the stock is doing and what you're looking to get out of it. And a couple of times I just want to sell, I did a video about greed a couple weeks ago, and this kind of relates to it. Like, you'll get people all the time that say, hey, I'm up X%, I'm up 100%, I'm up 200%, I'm up 300%. Do you think as a sell, I still have 30 days on it? And at the end of the day, you never know what's going to happen, and the volatility in the markets right now, and also option pricing. You could be up big one day and down big another day. For example here, I pulled up Microsoft because it's one of my regrets recently. So after earnings, it didn't really move too much. So what I did is I bought the 110 call. It was about 108. I bought the 110 call, and then like a day later, it went up all the way up to 111. I was up over 100%. I think it was up 125%. And I was like, oh, this will probably continue. And if you look here, the chart went down and never came back up, and it did come back up. But the problem with options is if you run out of time, like I actually bought it for 10 days out. But to get back up to 110, it took like 7 days. Went down from 110 all the way down to 104. Yeah, it touched 104, and then it came back up, but so slowly. It didn't rip up. And these rip ups or these drop downs, so when you have calls or when you have puts, or if it goes the way you want, on these rip ups or these rip downs, like let's say you were shorting here, take the money, because as you can see, it's very two-sided here. I can zoom in here, from when I bought it. We went up to 111, but then it gave it all back within 3 days. Just insane. And if you look, I was up 100%. I didn't take the money, and I definitely regret that, because I think I lost like 25 bucks or something, because it came up to the 110 call, the 110 strike here, but it didn't hold it. And even today, it's pretty bad. Even today in the markets, if you look at SPY, we actually had a pretty good day in terms of movement on the market. SPY went from 280 up to 282. Yesterday it was 284. I actually had some 284 calls yesterday, and I sold them for only a 30% gain. I didn't get greedy because they were actually for this Friday, and that's tomorrow. No, 2 days from now. So I bought some calls here for 284 when it, 2 days ago it was like 283 range. And I sold it for 30% because it was taking a long time to get up to 284, and it was taking a long time, and I didn't want to, go crazy. So thankfully I took the profits this time, because I learned from Microsoft that I took the profits, because then it went all the way back down to 281 today, not even close to 284. And it expires. So when you're trading options, you definitely need to get the timing right, or buy some stuff further out. But even then, you're going to be losing some money on these down days. And another thing is what people do. What I notice what a lot of people do is, let's just take a look at let's look at 2 days out. And let's do 7 days out, like a week from now. So a week from now, what a lot of people will do, and if you look at these, these are 100% gainers today, these puts, just because of the way the market is. I think we did have a 1% down day, but it recovered a little bit there towards the end of the day. But if you look at these puts, what I noticed, what a lot of people do, or these calls, for instance, it doesn't matter either side. The pricing is about the same. They'd be looking at like these 50-cent puts, or these 20-cent calls by next week, because they really believe that the market is just going to continue on down. But I mean, if you're looking at the chart, I mean, it goes down, it goes up, it goes down, it goes up, and all the while, any day that it's not going the way that you want to, it's wasting time. So when you're trading options, you're wasting time away, and these options become worth less and less and less. And that's why you can sell options and do that kind of thing. But when you're selling options down in here, let's say I sold these 270. Let's say I sold these. You only get 48 cents. You're not going to make a lot of money here. Typically people don't sell these down here for that short. I mean, if you did a vertical spread, you only get a 7-cent credit. So if you're buying options at this point, for example, these 50-cent puts here at 276, it could come down here. But what a lot of people do is that they don't really take a look at the fundamentals, and they'll say, hey, I'll buy 10 of these for 500, and then they're gone. That's $500 gone if it doesn't come down here. Thinkorswim's calculating you have a 15% probability that's going to go in the money, which, I mean, is not great. It's an 85% chance. Now, this changes. The probability in the money changes constantly, mainly because of the stock moves. Like, let's say tomorrow the SPY drops $4. This probability is going to change to like 30% instead of 15%. But we haven't had that big of moves. We had a $2 move today, and then the day before that, we went up a buck yesterday. It was like $1.80, I think, on SPY. And just be careful. Like, what people just what you're trading, you have to realize that this could potentially be worthless, and not to get so caught up in also like the politics or anything like that. Like, don't get too caught up in like what people are doing or what people are doing, because the stock's going to do what the stock's going to do. It's not going to it's not going to do what you think it's going to do, like the stuff in Turkey or China or stuff like that. People think that, hey, this is going to get cut 10%, 15%, and it just might not. I mean, we've been going down a little bit here, but there's really been a lot of strength in the markets. We had a crazy run. We had a crazy run here, and no one really expected this, where you could have made a lot of money. But you can't time, like, you probably would have made a couple 1,000% on some calls and puts in this, but no one. I mean, meanwhile, all those people back down here, back in August or October, November, and they really beat the bears up, because if you were shorting this whole time, you're just feeling a lot of pain. And let's say you were buying puts the whole time, you weren't making any money. You were losing money for months and months, and this actually went on for, more than that, because, yes, the last major dip was November 2016. Meanwhile, the bears are getting beat up, and then you have this one opportunity. At this point, a lot of those people are not even short anymore. They went long because of the way that it went, the way that they were losing money just hand over fist, month after month, day after day, week after week. It would really get to where they would change their positions most likely. But timing the market, you definitely could have made some good money here shorting this. But the common mistake that I see is people continually gambling, buying cheap calls, buying cheap puts, and they're constantly losing. And that's not a winning strategy. Having good setups is a great strategy. Alibaba is another one that I had here. I actually down in, it was a couple last week, or was it earlier this week? Actually right here. So down in here, I actually had a vertical put spread for 180, 177.50 that I just took $100 loss on today, because literally in 2 days it dropped $13 and I didn't have any more time on it. I put that on, I think, Friday of last week, and now 4 days later I was actually up on it 2 days ago, and now it's dropped down to 169, from 180 down to 169. Looked like it was leveling off here. It had a nice area support, and that didn't work. So what I did, I sold that, took the $100 loss, but then I put a strangle on. Here I bought the 160 call and the 172.50 put. So when you understand how a stock trades, like every stock has their own personality. When you understand how a stock trades, like this, for example, if this falls $13, you know, it's gonna have some huge rips and some down moves. So, you know, if you look at the past here, had huge rips, and then we had some crazy down moves here. So huge rips, and then it had some crazy down moves. So once you get comfortable trading certain stocks, the nice thing about options is you can trade the same stock many times once you understand it, but you have to have the right setup. You can't just go in there and, you know, like I said, buy some cheap puts, buy some cheap calls, and make money. I mean, if it were that easy, people would be making money all the time. And you know, you may get lucky, and you may buy some of those. I think a couple, like 3 or 4 years ago, I actually bought some SPY calls for 11 cents one day, and SPY gapped up like $2. I made like $400, and I thought it was great. But that's not something that's repeatable day in, day out. The way to make profits in the market and the way to be repeatable is having a good strategy, having good setups, and sticking to you know, being disciplined in the market. And that's why I put this trade on. So I'm up about 30% on these on those calls right now, because it's at 169. I think after hours, we're pull this up here if we can, the 15-minute chart. Yeah, after hours we're at 170.50. So as you can see here, so I actually put it on an open. It was what, 166. I bought the strangle. I bought the 160 put, and then the 170. And I only bought it for $1, and now it's trading at like $1.30 or something like that. So right now it's at 170.50. So chances are we're going to get some volatility here. You know, you can see here that if you put a strangle on when it was 180, you would have made some major bank. And they got earnings coming up next week. So, you know, that's all I really wanted to say for the people that are watching this, you know, right now, or the people that will watch it. That, you know, just be careful. Don't gamble. Just don't always buy cheap calls. Don't always buy cheap puts, because it's not always what's best for you. You know, learn how to trade. Learn to know what position you're looking for. We also have a free options trading group. I have the link below if you want to join that. We definitely would love to have you there. If this video was of value to you, hit the like button and subscribe to our channel.